Okay, let's tackle this Fintech reading. So this is an interesting kind of, I guess, somewhat paradoxically low-tech reading, meaning that there's not a lot of formulas. Well, there's no formulas here that you have to worry about, but it is a topic of growing importance in the financial markets and something that would make a great question or two on the exam, just to make sure that you are at least cognizant of the changes in the market. One thing about finance is, if you think you know about finance today, if you wait a couple of days, then you'll be completely outdated if you don't keep learning. So Fintech, this is of course financial technology. It's the association or the relationship between technological developments and the financial services industry. And the firms that are developing these technologies or exploiting these technologies are sometimes referred to as Fintech companies, like biotech companies, so a Fintech company. This revolves, I guess, around the use of big data. And of course, that's a sort of a cliche term now, where big data just is, it's all about size, I guess. So it turns out that size is important because we get all this data in the economy that we can use to make better buy-sell decisions or better management decisions or better risk management decisions, those types of things. So we've always had lots of data in finance, or at least for a long time. Of course, all the security market filings and 10Ks and market data in terms of price and volume and tick by tick and all those types of things, economic statistics that goes on and on. But those are what we would now refer to as traditional sources, and still, while very important, okay, what's been added in the big data environment is these non-traditional sources. So stuff that comes from individuals. So all that social media stuff and online reviews and those types of things. Well, we can use computer algorithms to pull that stuff in and see if there's information there. So you can think about what is trending or what's not trending, and what do people like or don't like, and you can bring it in and analyze it, even if it has a very little structure to it. So all the data that's generated by individuals that used to be something that was not available we couldn't gather it. Well, now we can gather it. There's, of course, issues associated with privacy on that, but nonetheless, we are capable of gathering it from many sources and combining it with traditional sources and seeing if that makes us better at our jobs. Corporate exhaust, which, of course, this is sort of a word that obviously developed somewhere other than a textbook, but all this means is that we've got, retail scanner data and, sales receipts and what all the stuff that comes out of the back end of a company from the business that they do. Well, if you can collect all that, well, there may be information there, sort of like the notion of having 3 FBI agents digging through your trash at night. Well, they're looking for the exhaust from your homestead. Well, finding receipts and coffee grounds or whatever it is. Well, this would just be data that we could gather that would tell us something about business or volume or trend or something like that. And then the Internet of Things generally. All right, so these are just smart buildings and smart plants and smart telephone poles or whatever it happens to be. So everything is going to have a chip in it and everything's going to have a camera, and we're going to gather all sorts of data that for most of which is going to be white noise. The question is, are there going to be elements that we can pull out of that by very cleverly capturing, curating, and analyzing the data? Well, there may be, and that's when you take all of this and you add it to these traditional sources, then what we have is a big data environment that's going to certainly has already changed the world, but will likely change it in new and dramatic ways. So when we talk about big data, I think it's really volume. I remember hearing it wasn't very long ago that we first had to, in my work environment, get terabytes. So we've got like a 3 terabyte drive, and we thought that was so cool. And of course, now we're talking about petabytes. Well, all right, so the volume of this data is getting bigger and bigger. So the challenge of big data is being able to host these type of data sets and then be able to manipulate and analyze them. Well, as the volume grows and grows and grows, I don't know what comes after petabytes, but I suspect that even in my advanced age, I'm going to live to know what comes after petabytes. So velocity refers to the idea of latency. So latency is the term that means talking about how how timely the data is, so we can get real-time data. That would be, if it was truly real-time, that would be 0 latency. And then if you're getting 10Ks, well, there's lots of latency there, right? They're filed a month after the quarter end or something like that. So velocity is how quickly the data comes in, and the issue of latency is the time that between when the underlying data is generated and when we actually have it to analyze, and when we can use that analysis to trade or do whatever we're going to do with it. And the variety, of course, is unbelievable in terms ranges from structured data, that would be something like a spreadsheet, to unstructured data, and that's going to be a video on television using facial recognition stuff. I have a colleague that's working on a paper that's combining a couple of things, but one of them is videos of CEOs making statements and using facial recognition to determine when they're lying, right? So that's like really unstructured data, or at least in my world. So variety is going to run the full gamut, and it makes for an exciting world, and an ambitious analyst is going to be able to do things that were not possible just a few years ago, or even in some cases a few months ago, right? Well, how do we do all this? Well, it's the idea of AI, or artificial intelligence, and machine learning. And these are closely related. That probably offends some people, but artificial intelligence is programming a computer to simulate the way humans think, or neural networks, or human cognition. Machine learning is perhaps a somewhat lower standard of what the machine is able to do, but it's where a program or a computer algorithm can improve itself as it repeats a task. So it's sort of self-learning, meaning that it'll determine, well, this is what I did last time. Here was the error. The error is related to what? So it'll change its algorithm for the next iteration of this. And of course, the next iteration could be just a millisecond later, right? So supervised versus unsupervised learning. So again, this is really under the heading of machine learning, I think, at least the way I conceive it. But supervised learning is where we label inputs and outputs, and we let the computer work from one to the other. Right? So, okay, this is an output. These are all inputs. You figure out the connection between the two, Mr. Computer. Unsupervised learning, we don't label the inputs, and we just say, okay, find make some sense of all this data. So the unsupervised learning removes a constraint. Deep learning is where we would have layers of neural networks. So we'd have a neural network, something that again is AI-based, trying to simulate human cognition, and then what the output from that would go to a different neural network to be reanalyzed, not unlike the really, really deep neural networks, which are embedded between your ears and between the ears of the other people on the planet. So deep learning is where we have this successive network analysis stuff. Okay, in terms of what the output from all this, or the outcome from all this is, can be that we either have great models that are the Goldilocks. It's not too hard and it's not too soft, or it's not too hot and it's not too cold. Okay, but we can also have overfitted and underfitted models or algorithms. So something that has been overfit is where the computer has come up with a model that's essentially too complex. That is, it's treating noise as a fundamental parameter. Right? So the problem with that, of course, is that if it's noise, it's not likely to work out of sample. If it is underfit, then the model is too simple. So it has fundamental factors that it's not picking up on and not including in its analysis. So what we need is not overfit or underfit. We need it to be just right fit, right? So anyway, so overfitting is treating noise as a true parameter. Underfitting is where the computer is missing things that are actually fundamentally related to the outputs that it is trying to generate. Okay? In terms of investment, or in terms of applications to our industry, so text analytics, so using unstructured voice or text. I actually do a little bit of this in my world, trying to think about the way people learn. And it's fascinating. So natural language processing, this is where we're trying to get a deeper meaning out of what is being said. Either, again, it could be voice, but it could also be written communication. So trying to understand not just what words show up. Okay, so text analysis actually looks at what words are showing up in frequency. Natural language processing is trying to put multiple words together to make sense of it. And that's not a really good description of the difference, but that is the intuition. And then, of course, risk governance. Well, maybe this is a way that we can understand the risk the company is taking by analyzing communication between employees or between analysts, or even by analyzing what data the analyst is being exposed to. Right, those types of things. So the world, it's a brave new world in terms of what we can do with this in our industry. What has certainly come to pass, and is for good or bad, has been lots of algorithmic trading. Algorithmic trading can take on a couple of flavors. We can have sort of execution-based stuff that is designed to minimize market impact. In other words, there's some fundamental reason that an entity would bring a trade to the market, and they're trying to minimize the price change between the point at which we make the decision and the point at which the trade's executed. What would be probably more commonly discussed is what we refer to as high-frequency trading, and that's where we are trying to infer information from the trades themselves. So we're going to place an order, we're going to get back the price at which the order was actually filled, and then we're going to analyze what that means, and we're going to place another order based on that. Would be a simple way to think about high frequency trading. And it's really trying to replicate the way a human trader would interact, but the computer is sometimes 2 or even 3 times faster than humans. That's a joke. Obviously, it's thousands of times faster. So it's going to take in data, analyze it, decide how it should respond, and then spit out the next increment of output. Maybe it's a decision to trade, and it's going to do it in milliseconds, right? So before our eyes could even recognize the data on the screen, the computer can have analyzed it and be ready to send back a trade in response. Robo advisory services. This is an attempt to sort of, homogenize the retail financial services industry. So it's using surveys of retail level investors, try to understand what their risk tolerance is, how they're saving, what they're saving for, and give them advice based on good financial economics. And the advantage, of course, is that it's really low cost. You don't have to have somebody sit across from you, and you don't have to, if you're the person with someone sitting across from you, you don't have to send their kids to college and pay for their BMW. The disadvantage is that you may end up with clients that really don't understand why they're doing it, and therefore may have less commitment to a particular plan, that sort of thing. So it's like, do we really need a pilot in the cockpit of a jumbo jet? Really, we don't need one, right? I mean, we have the technology that the plane could take off, fly itself, and land without a pilot up there. Personally, when I get on a plane, for some reason feel comforted when there is a pilot in the cockpit. So it's the idea of having somebody to kind of hold your hand. Well, maybe there is some benefit to that will keep people engaged in their savings process and those types of things. So I would tend to focus on the advantages, but there are clear arguments associated with the disadvantages as well. What about this distributed ledger technology? Of course, this is hot topic and probably will continue to be a relatively hot topic for a while. So a distributed ledger is just a database, okay, where each participant, we take a ledger and we're going to distribute it. Distribute the ledger throughout the participant base, okay, and each participant has an identical copy. So there has to be some sort of mechanism that validates the entries, okay, and the data is going to be secured by this cryptography thing, which makes it hard to hack into. But even then, because it's distributed, hacking into one person's or one iteration of the ledger would leave potentially millions of other copies of it out there, right? So a distributed ledger just means that it's distributed, the entire ledger is distributed to many places. Blockchain is where we take the ledger and we put it in a block, okay, and we chain them together, right? So it's blockchain. So the distributed ledger records the transactions sequentially. The transaction is a block, and then it is chained to the next transaction and so forth. So blockchain technology. And these can either be permissionless or permissioned. Permissionless just means anybody can go in and look. Permissioned means there's different levels of access, and of course there's likely a regulatory environment that will develop around this sort of decision for blockchain applications. So what about financial applications of this? Well, you may have heard of these things called cryptocurrencies, right? So this is just an electronic medium of exchange. which means that it's going to be a way that you could buy and sell stuff. So it's like a currency, so something that would be issued by a government, although it's not issued by a government, right? So it is this. It is an electronic thing that's issued by essentially a private issuer, and it would be something that would replace what we now think of as currency if it were to gain acceptance and that sort of thing, which is still a ways off. But nonetheless, that is the idea behind it, right? So it facilitates exchange. We could also have smart contracts. These are contracts that automatically execute. So think of an option contract. It's got an end date, and under some circumstances, like it's in the money, it could automatically execute. So we wouldn't have to worry about what we do at the end of the life of the contract. And then finally, this idea of tokenization. This would effectively be electronic proof of the ownership of a physical asset. So a car or a piece of real estate or something like that, well, embedded within the distributed ledger or the blockchain, we would be able to say, well, this is evidence that I own my home. And if you want to buy it from me, then I will take this token or this tokenized ownership proof and I will transfer it to you. So that is the idea behind fintech, and of course this reading is just scratches the surface. The amount of effort that's going on behind the scenes, not behind the scenes, out in front for everybody to see. The amount of effort and the amount of money being pumped into this, of course, is staggering. So we are going to see big changes in the financial markets over the next period of time. 3, 5, 10, 20 years, whereas as this stuff matures, and I think we're going to see a revolution in how we analyze things and how we trade and how we value stuff. So this is going to be important for exam purposes this year, right? This is a fairly low-level commitment to the idea of fintech, but you ought to understand, what's going on here with big data and what are the issues involved. How is this going to, what are the types of machine learning that we can use, where can we apply it to applications, those types of things. So a few note cards on this, and I think you'll be in good shape for this for the exam. So good luck with fintech on the exam, and good luck with fintech over the next 20 years of your career.